Hello. In this video, we're going to take a look at forecasting sales. There are a number of areas or applications where you might use this in finance. For example, in corporate finance, one of the things people do is forecast budgets, additional funds needed, things like that, and they need to forecast sales for their own company. Where I tend to use this more frequently would be in valuation analysis, trying to figure out what a company is worth. And often you're going to want to do a discounted cash flow analysis, or even if you're doing something like relative valuation with PE models or something like that, you're going to want to forecast the financial statements out for at least a year or two to get a feel for what earnings per share is expected to be next year. And when you start doing that, you're going to start with forecasting sales. So let's go ahead and take a look at some of the things that you might need to consider in forecasting sales. One of the first areas to start with is historical growth rates and volatility. So here you can see I'm looking at an example with Walmart and Tesla. And what I did is went and collected some financial data. This is just revenues for Walmart and revenues for Tesla. And what you can see here is the historical values. And then I went ahead and calculated the percentage change. Now, if you note, Walmart, their best year over the past few years has been about a 5% growth rate. Their worst year is negative 0.73%. Most years, they're right around 1 to 3% growth rate. So if I'm forecasting the next year, my starting point is probably going to be somewhere around 3%. I'm not going to see Walmart grow 20% or 30% revenues next year. Based on historical data, that's just not reasonable. On the other hand, if I look at Tesla, you can see Tesla's sales growth has been quite a bit higher. In the first couple of years, we see over 100% growth. And then it's slowed down 58%, 26%. Then it's picked back up the last couple of years. Two things to note here. One, not only is Tesla growth a lot higher, but it's also much more volatile. You can see a growth rate of almost 400% or a growth rate of 26%. Those are huge differences. So if I'm forecasting sales for Tesla for next year, I might be looking at 50% growth. I might be looking at 70% growth. I might be looking at 90% growth. All of those are reasonable based on historical data. So one of the starting points is looking at historical growth rates. That's not going to tell me what my sales forecast is for next year, but it's going to give me a rough guideline of what to expect. The next thing I want to look at is the current status of the potential market and competition. Now, as a quick side note, I'm recording this in January 2020. I'm familiar with Tesla, but I would not call myself a Tesla expert. So take this as just a rough idea, not really digging into all the aspects of Tesla. And if you're watching this in 2022 or something like that, your information is going to look a lot different. But just for those of you that are not familiar, Tesla sells electric vehicles. So one of the things I'm going to look at is how many cars are being sold. Tesla's not going to sell more cars than the number of cars being sold altogether. So I've got to look at how many cars are being sold and what markets is Tesla in. Is this global? Is this in the US? Is this in Europe? Where do they sell their cars? And how many cars are being sold overall? Then what percent of those cars are electric? Now again, I'm recording this in January 2020. Electric car sales have been increasing over the last couple of years, but they're still only about 1 or 2% of the overall market. They're probably not going to jump to 50% of the market next year or 60% of the market. Maybe they jump to 3% of the market or something like that. So I've got to start with how many cars are being sold. And then since Tesla only sells electric cars, what percent of those cars are electric? That gives me a rough idea of the potential sales. How is that changing? Is that growing? Is it staying stable? Is it staying the same? And I want to do that both for how many cars are being sold as well as for what percent are electric. If there are, and I'm just making up a number here, 1 million cars being sold globally, and 2% are electric, and those numbers have been stable for the last 2 years, then that gives me a rough idea of how many cars I should expect Tesla to sell. On the other hand, if sales are going up and electric sales percentages are growing, that's going to change things a little bit. So I've got to factor in what's going on in that market that Tesla is operating in. I also have to look at who's their competition. So if I'm focusing on electric vehicles, who else sells electric vehicles? Is General Motors getting into that? Is Ford getting into that? Are there other startup companies that are selling electric vehicles? What foreign car makers are selling electric vehicles? All of that has to be factored into my analysis of their competition. If there is a total market for electric vehicles of 10 million in sales and Tesla has no competitors, all 10 million is theirs. If Tesla has 4 competitors, then they're probably not going to get all that 10 million. So I've got to look at who else is selling and what's happening with those competitors. Also, what other products does Tesla sell? As I mentioned, I'm not a Tesla expert, but I know one of the areas that they have are electric roofs. They're kind of a solar adapter for roofs that they're using. It's a tiling system. What's going on in that market? So that's small relative to their cars, but maybe that's an area that's going to be growing. What other products is Tesla selling, and how can that impact their revenues? Then, how else can Tesla expand their potential market? So I mentioned the idea of the solar roofs that they're selling. That's one area. They might get into more battery production, lots of different areas that Tesla may focus on. All of that is going to give me a baseline for my Tesla sales potential. Note that some of these are qualitative and some are quantitative. So I've got to keep in mind, I'm looking at factors, I'm not getting exact numbers yet. Then I want to look at the current economic climate. How fast do I expect the economy to grow? Are we expecting the economy to grow at 3 or 4%? Are we expecting it to be flat? Are we expecting a recession? All of that is going to affect auto sales and specifically Tesla sales. What's happening to interest rates? A lot of people don't purchase cars for cash, they finance them. Higher interest rates make cars more expensive. Lower interest rates make cars cheaper. Is there different economic growth for people who are buying electric? So is the market segmented? For example, if I'm buying an electric vehicle and most of those start at 40,000 and up, then I probably need to have a little higher income than people buying vehicles that are in the 25,000 range, are kind of starter vehicles or maybe used vehicles. So I've got to look at the target market for Tesla and how is that. This is a little bit more of a micro factor than a macro factor, but it still falls under the economic issue. Another micro factor, what's happening to oil prices versus electric prices? If gas prices are going up, all of a sudden that makes my Tesla a little bit more attractive from a maintenance perspective. On the other hand, is electric costs going up? That makes my Tesla a little more expensive to run. Those factors can have an impact at the margin. About gas taxes, tax credits, etc. All these factors are going to play into my analysis of what the potential sales for Tesla can be. Then I want to look at strategic initiatives. What new things is Tesla working on? So for example, they recently came up with a prototype for Cybertruck and had a marketing expo for that and are taking advanced orders. It's probably not going to be out for another year or two, but that's something that's going to affect their sales. What other software features are they adding? What battery efficiency are they working on? Are they able to expand the range for their cars? Are they able to expand the acceleration? Are they able to do other things? What other new products might they come up with? All of these are going to affect my sales forecast. Then comes the hard part. We have to remember when we're forecasting that we're wrong. So I did a video recently on false precision in finance, and I think that's one of the biggest factors in finance to remember is that we deal with forecasts a lot, and anytime you're forecasting, you're going to be wrong. Nobody has the magic 8 ball that's going to allow them to be correct. If they are exactly correct, it's probably more a fluke than it is anything strategic in their process. The idea of forecasting is to get a baseline to move closer to predicting. You're never going to be exactly accurate. So remember, your forecasts are merely educated guesses. They're not going to be accurate, which means you need to think in terms of ranges. If your forecast for sales is 10 million, you shouldn't be surprised if sales come in at 10,300,000 or 9,700,000. You're going to be wrong. Now, if your forecast for sales is 10 million and they come out 20 million, then you should evaluate your process because that's a much, much bigger area. But don't expect your forecast to be exactly correct. Instead, think of a margin of error. Now, remember back to a few slides ago. Let me jump back to my Walmart versus Tesla. My error for Walmart in terms of percentage error should be relatively small, right? Because I don't have a big range of forecasts. On the other hand, my range of error for Tesla is probably going to be quite a bit bigger if you look at this volatility. So when I'm thinking in terms of ranges, one of the things that I have to remember is that the range is going to be dependent on the company. The more volatile their sales have been historically, the more error I'm going to have in my forecast. Stay up to date on all of the factors that went into your forecast. I think this is one of the hardest things for an investor to remember is if you own a portfolio of 20 or 30 or 40 companies, you have to be monitoring those companies on a regular basis as well as looking for new opportunities. That takes a lot of time and effort to do. This is not something you're going to do in 30 minutes a week or something like that. You have to know what's going on with the company. You have to read press releases. You have to look at what's going on in the industry. You have to look at all those factors that we talked about in the previous slides and know what's going on. Otherwise, you're likely to get blindsided when new information comes out. Think about what you've missed because almost invariably you're going to miss something. Companies are complex, especially bigger companies. The bigger the company, the more things that are going on within that company, and the harder it is to make sure you get everything right. So you're missing things, evaluate, try to keep up to date. Consider scenario analysis. And some people will go further and do simulations. I'm not a big fan of simulations because I think they give you data overload. You get a much broader picture, but it doesn't really give you much precision. Instead, you're dealing entirely with ranges. And so something like a scenario analysis with a bull case, what's my kind of optimistic outlook, a base case, what's my neutral outlook, and a bear case, what's my negative outlook. Those can be useful. And finally, if you're doing this for valuation, you're just getting started. This is only one minor step of your valuation analysis. You need to evaluate risk. You need to look at margins. You need to look at discount rates that are going in, lots of other factors. So sales are the starting point for valuation analysis, but they're the proverbial tip of the iceberg. You've got to dig a lot deeper in order to get into making a decision of whether or not you want to buy that stock or sell that stock. But you can't do the valuation analysis until you've got a sales forecast. We're going to stop here. Thanks for your time.